Good morning. My name is Miguel Gonzalez, and I'm a certified retirement counselor with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Let's talk about long-term care insurance. This is your long-term care action plan, a step-by-step guide. Those turning 65 this year have a 7 in 10 chance of needing long-term care, LTC, at some point. With the cost of private room in a nursing home now topping $100,000 per year, the thought of paying this or for a loved one can be staggering. However, the high cost of LTC is no reason to delay creating a care plan. It is important to think through the implications of long-term care on retirement plans and the effect that paying for LTC may have on you and your spouse and the options that can defray these costs. Here you will find 4 steps to consider when thinking about long-term care. Number 1, assess your likelihood of needing long-term care. As many as 70% of people may need LTC in their lives, which means that 30% won't. If you're among the minority, your plans may look different than those expecting to need LTC. How many loved ones have required LTC? What does your family health history look like? Assessing the likelihood that you will need long-term care at some point can inform the rest of your planning process. Number 2, evaluate long-term care costs. LTC costs may vary widely depending on location, local cost of living, the level of care needed, and the amenities offered. An apartment in an assisted living community in Pella, Iowa will likely cost less than a private room in San Diego nursing home. Some instead opt to stay in their homes and hire private caregivers. By researching and evaluating the costs in your area, you will have a better idea of what to expect in the location where you will need and receive long-term care. Number 3, research your payment options. Ways to pay for LTC include private savings, a long-term care insurance policy, an annuity or pension, Medicaid with asset restrictions. One of the main complications with LTC occurs when one spouse requires care, but the other does not. In order for the spouse needing care to qualify for Medicaid, they must have minimal assets. This situation can leave the other spouse without adequate resources to support themselves. A financial professional can help and work with married couples to create a plan that allows for both spouses to receive the care they need. Meanwhile, an annuity or pension can provide regular income to help pay for long-term care, sometimes in combination with an LTC insurance policy or payment from retirement savings. And number 4, reviewing all your options at your disposal can help create and evaluate future steps. Create a long-term care fund. Once you've identified your best options for paying for long-term care, it is time to create a dedicated LTC fund or track your investments. Having certain funds earmarked for LTC needs ensures they will be there when you need them. You may also want to consider investing in a long-term care insurance, which helps cover the cost of LTC facility without dipping into personal assets. LTC insurance may not be right for everyone and coverage varies, so it is important to discuss coverages with your financial professional before committing. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon and don't forget to subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching, and I will see you all next week.